G'day guys, my name's Jared. I'm a part-time crypto trader. I've been studying the financial markets and crypto for about 18 months now. Cryptocurrency is like an ever-expanding field that's pretty much growing every single day. Cryptocurrency is really just a new form of financial market and can be traded with the same methods as our generic markets. One method is called technical analysis. What if I told you there was a way to buy and sell your crypto based on educated decisions instead of guessing what and when to buy or sell? Today I'll be introducing the very basics of technical analysis. Everything that's shown in this video has been taught to me through the education provided at MBA Trading Academy. So let's get started. I'm just going to share my screen. So the very first thing we learn as in technical analysis is where to find support and resistance. These are levels at which we can have a higher chance of finding buyers or sellers, depending on whether it's by support or resistance. At a support level, we like to see that buyers are sitting at those levels. And then at resistance levels, we look at the fact that sellers may be entering the market or people exiting their positions. Generally, the way to think about it is support levels are people who are buying in on the low levels on support. And once it hits a resistance level, the people that bought in at that support are now exiting some of their positions at that resistance level, which is how we think about it when we draw up our analysis. In this case, you can see where once resistance becomes support, and it goes the other way too. Once resistance comes support, support can also become resistance in a downtrend. So in this case, we pushed up above resistance, we held, and then we pushed off, confirming this as support. And once again, so we come back up to the resistance level here. So we pushed up to resistance, we had a pullback, pushed up again, couldn't quite get over that resistance level. And then since then, we saw a pullback to our support level, which is where we saw again, buyers coming back in and pushing the price upwards again. So support and resistance is really just an indication of where a higher chance of buyers being in the market or entering the market and sellers entering the market at different levels. The next thing I'd like to look at is candlesticks. So actually I'll keep the support and resistance in. So I have a diagram here that I'll show. Let's rip this over. So this is a diagram of many different candlestick patterns. In this particular instance, I'll show a select few. The ones I'll be showing is morning stars, evening stars, bullish engulfing, and bearish engulfing. But there's quite a few here, but really the basic ones, the easy ones that are in the chart laid out that I can show you are morning stars and evening stars, bullish engulfing, and bearish engulfing. So if we come back to here, this was our previous resistance level. We pushed up to this resistance level and then we presented a evening star. This is an indication that we may be slowing down and maybe pulling back a bit. And this is what happens here. So we had that evening star and then we push back down. We really like to use candlestick patterns with support and resistance because you can see candlestick patterns anywhere in the chart. But where it really matters is at key levels, key support levels, key resistance levels, trend lines, and that sort of thing, which is another thing we will get into. So again, here we pushed up, we found resistance, previous level of resistance. So on a lower time frame, you would have been able to see this here. So previous level of resistance, we pushed up to it, evening star, and then we continued back down. So get rid of that. Same instance here, we pushed off, we broke this resistance level, come back down, we tested it as support, and then we presented a bullish engulfing candle. This is an indication that buyers broke a resistance level. They had enough buying pressure to break that resistance level. And then once we held over that level and then presented a bullish engulfing, that's an indication that buyers are now where sellers were. So there are more buyers than there are sellers now. And then that's a great indication of a continuation move upwards, which is what happened in this case. Same again. So we have a pullback to a support level. You can see a bullish engulfing here again. So the bullish engulfing candle engulfs the smaller one that's next to it. And we had a push off the support level as well. Exactly the same thing again here, which is obviously pretty common because we're in an uptrend. So it's common to see bullish candlestick patterns in a bullish uptrend. But same again, we see a bullish engulfing candle on a support level. Good indication that we're going to continue upwards again. So just get rid of that. Next on the list is trends. So I'll get rid of candlesticks, but I'll put in some trends. So trend lines is an indication of direction of trend. So trend lines are just a diagonal line, whether it's an uptrend or a downtrend. It depends on whether it's going to be a support or a resistance level. So in a downtrend, the trend line here is going to act as resistance. So every time we get close to it or we touch it, we reject off that level. So we can see that here. And then in this instance, we broke through that level, broke that triangle. We pushed over the market structure level. So we'll get into market structure in a bit as well. But we broke new market structure, we tested it, and then that's when we presented a bullish engulfing. So that would have been an excellent time to enter. But it's one of those things where we were in a downtrend, we had a break, then we had confirmation. So that's when you could have considered an entry. Same goes for downtrends as for uptrends. So in this case, we have an uptrend. So every time price comes to this level, we see a move upwards again. So we're at this level again. So we can only assume that it has a high likelihood of continuing upwards after previous touches. So trend lines and support and resistance really go hand in hand. Another thing you can add into this is market structure. So I'll just get rid of everything. Go to market structure. So market structure is easy to detect 20 candles or so ago. So within the last 20 candles, it's hard to determine whether the market structure you're seeing in the current time is is a level, is a high, low, low, high, whatever. But previous to that, anything before that, it's easy to detect market structure levels. In this case, we see a lower high, we've come down, we've presented a lower low, lower high, and then we've come lower low again. So this low here is lower than this one. So that makes it a lower low. So when we add our trend in, just for this instance, we had a trend resistance level, we broke that level. So this could have been an indication of a reversal. So a downtrend turning into an uptrend. And this is what happened here. So we pushed off, had a significant run here, and we made a higher high. We came higher than our previous high, which makes it a higher high. Then we come back down and made a higher low because it is higher than this previous low. We pushed off again, we came higher high, we came higher than here, so that makes this a higher high, and once again, higher low, and again, higher high. So in this instance here, we would be looking for another higher low to possibly enter the market again. So that's candlesticks, support and resistance, and trend, as well as market structure. Another thing we like to use as traders is a tool called Fibonacci. Fibonacci is levels at which we could see potential continuations. There's a few key levels here, but in this video here, I'm just going to talk about the 382, the 50, and the 618. Those three levels are really commonly used in Fibonacci trading. So in this case, we take the tool, and we would click at the top of that wick down to the bottom at this one here. So just connect them up like this. In this case, we really want to see the levels of the Fibonacci, so the 382, the 50, and the 618, be respected. So as you can see here, they are respected. The 50 is respected really well, and the 618 is respected really well. So that's a good indication that Fibonacci has a decent chance of being successful in the probability side of things. So we come from the top down to the bottom. That's where we drag the Fibonacci tool, and the most common points of rejection are the 50 fib level and the 618. In this case, we can see we come up to the 50, we had a bit of a sell-off, we come back down again, and then we pushed all the way up to the 618, perfectly on the 618, before we saw that continuation down. 618 is most commonly used for continuations, and in this case, it obviously happened, as you can see. We hit the 618 level, and then we continued downwards. In the exact opposite case, we have a bullish scenario for using the fib tool. Different levels, so the different 382 and the 50 and the 618, different levels, it's just different levels of strength in the run. In this case, since this is a pretty significant run, I wouldn't have been surprised to see it hold at a 382, because this was a really significant run and a really, really strong momentum run. But most commonly, Fibonacci levels really like the 50 and the 618 level. But in this case, we can see that the 382 played out and was respected very well. So that's Fibonacci. All these things here can be seen, can be used, all these lines and Fibonacci can be seen in the side panel here. I have my favorites bar, so I have certain things that are favorited. So as you can see here, this is where the trend lines are, our horizontal lines, which is used for our support and resistance. Our Fibonacci levels, so all our fib tools are here. So fib retracement is the tool that I was just showing here. And there's many other things here, but that's all that I will get into today. I want to keep this as simple as I can. The next thing I want to talk about is formations. So let's get rid of Fibonacci. Let's get rid of this. I'll put back in support and resistance. So there are quite a few different variants of support of formations. I'll talk about these two here because they're just in this chart and they're easy to explain. But there are many different types of formations. This one here is considered a double top. Double tops occur when a resistance level is hit. You see a little bit of a pullback, and then a touch on that same level, but not higher than the previous level. That is an indication that we could see a reversal. So that's what happened here. So buyers came in, we hit a resistance level, we had a pullback, buyers came back in, but they weren't strong enough to break this previous level. And then that's when we saw this run back down to our previous level support. The exact opposite can be seen here. So this would be considered a double bottom, which is considered bullish. So this one here, double top, is considered bearish. So in this case, as I was exactly the same I was just talking about here. So this would be a double bottom, which is a bullish pattern. So we approached a level of support, we pushed off, we had a bit of a pullback, we come back to about the same level, and then we pushed off again. And that's when we had that reversal. So we were coming down and then we reversed and we pushed off. So there's plenty of different ways to use these formations. A common one is for a confirmation. So we could have drawn this line here So we pushed up to this resistance level, this small resistance level. We came back below it, down again, back to our down to our support. We pushed over, we broke this level, this structure level here. We held over it, we tested it, and then we pushed off again. That is confirmation that this pattern, this formation, has a very high chance of playing out. In this case, it does play out, as you can see, but there's different ways of trading these formations. Everyone has their own different ways, and that's just what you have to work with when if you start trading technical analysis. So let's just get rid of formations now. Another thing that people use are patterns. Most of the patterns you see are mostly triangles. I'll show a quick section here. So a lot of these here are pretty common in playing out in these markets. Ascending triangles, wedges, broadening wedges, but I'll show a couple here. So in this case, we see an ascending wedge. This is a bearish pattern, but in bullish uptrends, it can sometimes break to the upside. So you really got to wait for your whatever confirmation levels you wait for. In this case, the ascending wedge, which is a bearish pattern, plays out and it comes back down to our support levels down here. Exactly opposite to that again, we have a descending wedge, which is a bullish pattern. This is a good indication of seller exhaustion and buying momentum. So we're coming up to a level and sellers are getting weaker and weaker before buyers finally step in and take off the market and send it in the direction that they want. You can see that in this instance again. So this would be buying exhaustion, buyers exhaustion. So buyers are getting weaker and weaker. They're making marginally higher highs before we see that breakdown here. So those are the few things I've discussed here today. They're the very basics of technical analysis. A lot of other things to consider when you're starting to learn technical analysis and trading. A big part of trading is risk management, your trade plan, so your personal trade plan. Everyone trades different, so you must form a trade plan and also document everything. The way to become successful in anything you do, but especially trading, is consistency. So risk management is a big thing. Obviously, everything to do with trading involves risk. So risk management is key, and it's risk management. There's risk management, trade plan. Sorry, risk management, trade plan, and consistency. They're like the three pillars of becoming a successful trader. So that's all I have today. So if you have any questions, just feel free to message me or comment on this video. But other than that, that's everything. Thanks, guys.